Right, let's talk. Let's talk mortgages if we can. Let's talk borrowing and let's talk real estate. Why? Huspy, the UAE headquartered prop tech startup, they've announced that its mortgage unit in the UAE has processed a record in home financing in November of this year. Rather than steal their thunder, let's get the thoughts straight from the team at Huspy. Now, head of brokers channel at Huspy is Sawan Karia, who's been kind enough to join us earlier this morning here on the Business Breakfast. Sawan, thanks so much indeed for your time.
Oh, thank you for having me.
Talk me numbers then. What have you done in November of this year?
Well, let me start off by just giving you a brief introduction to Huspy. Huspy is a prop tech startup founded in 2019 with a mission to solve and simplify the home buying process. We're born out of the UAE, so homegrown and expanded into Europe now. And we're involved with both real estate and mortgages. So about the announcement, as you say, we've achieved a record 1 billion dirhams worth of mortgages in the month of November. Now, this is not only a record for Huspy, but a record for the industry. No other financial institution in the UAE has ever achieved a billion dirhams worth of mortgages in a single month, in retail mortgages. So we're really proud, and I want to take this opportunity to thank our partners and customers for supporting us through the journey.
So growth and significant growth, record growth for you and for the market as a whole, growth in home finance. But what does that reflect? What does that show us about the state of the real estate market as a whole here at present?
Well, the real estate market is certainly booming. We've had a huge influx of population that's coming into the UAE over the last couple of years. A lot of new capital that's been deployed into the real estate market, and this is certainly helping the boost in real estate growth.
We've seen interest rates go up throughout the year as well. They've been hiked in line with what's happening over in the United States. That doesn't seem to have worked as a detriment at all.
No, quite on the contrary. I guess, if I look at interest rates last year, 2022 January, the 3-month EIBOR was sat at 0.3% approximately. Yesterday, 5.37%. So a huge increase in interest rates. And yet, this year, Dubai or the UAE has grown by 1.4x growth in the sector. So certainly hasn't deterred the investment into the real estate sector.
I mean, what's nice about what you guys at Huspy are doing is that you're able to sort of compare and contrast as well. You look at rates around the world, etc. We've seen interest rates hiking up pretty much across the world throughout 2023. Are we still competitive here when it comes to rates in the UAE?
Yeah, well, I believe so. Today, mortgage lending rates on the retail side do start at 4.24%. Now, you compare this to the US market as an example. Rates range between 7 to 8%. In India, 9% plus. So still very, very competitive from a rate perspective. Also, to note that the rental yields, the ROI in the UAE that the UAE can offer is anywhere between 6 to 10%. So there is still a lot of there's a lot of benefit to go down the mortgage route at 4.25%, 4.5% with the returns of 6 to 10%.
Certainly seen that in terms of demand for property here at the moment, plus the FDI, foreign direct investment, coming into the country throughout 2023. So I think it's fair to say that we can put 2023 down as a good year for the market, that's for sure. But what about the potential for growth in that market? What are you and the team at Huspy expecting for 2024?
So look, 2024, we're expecting a further boost. The Fed met a couple of days back and held rates. The anticipation is that rates will come down, at least 3 times next year, up to 0.75. There is an 85% likelihood that rates will drop in March. So this should boost demand further. There is a lot of inventory coming into the market as well. So this certainly helps the market. So we do truly believe that with rates coming down, coupled with the inventory and the government initiatives that have been put in place, we're expecting further growth next year.
I mean, looking at your position in the market and the fact that your technology, innovative technology, is very much at the heart of the ecosystem of property and real estate at the moment, by giving transparency and access to all players in that market. Are there sort of banks that are doing it better? Are they offering consumers better rates and better options than others at the moment? Are there the banks out there, the institutions, the lenders at present who are doing it better than others?
Well, there are some banks that are obviously a lot more competitive from a rate perspective. Rates range for residents. They range between 4.25% up to 5.25%. So there is quite a lot of competition. The banks are plush with the liquidity right now. So those with a lot of liquidity are offering really attractive mortgage products. A lot of banks have also now ventured into. A handful of banks ventured into non-resident lending. So they're also catering for the non-residents wanting to invest in Dubai or UAE real estate.
What are the best offers out there in the market? Are you allowed to give us any individual examples, or again, is there something for everyone?
Well, look, the Abu Dhabi banks are leading with the rates currently, starting at 424 and 444. However, I'd like to kind of just highlight that, you know, the lowest rate is not necessarily the best mortgage, right? So there's a number of factors that make up a mortgage product. You've got your initial mortgage interest rate, could be a fixed or a variable. If fixed, we've got to look at the revert or the follow-on rate. A mortgage is generally a medium to long-term commitment. So one must ensure they get a good rate throughout the mortgage period and not just for a couple of years. We also have to take into consideration the costs associated within the mortgage, right? So processing, bank processing fees, valuation fees, you've got mandatory life and property insurance. So you must take all of these costs into consideration when you do a full cost analysis. And finally, the flexibility that's built on the back end of the mortgage. So your exit penalties, your overpayments. All of these things make up a mortgage product. So not always the lowest rate is the best mortgage.
Congratulations on those record numbers. Thanks for leading from the front as well. 20 seconds remaining, Sawan. Good year for Huspy, 2023?
Oh, it's been a brilliant year. We started off in January at $500 million, and we've doubled our book within a year. So very, very chuffed. And
teams are happy, market's happy, we're all happy. Sawan Karia, Head of Brokers Channel at Huspy. Thanks very much indeed.
Thank you for having me.
Big thanks to Sawan. So mortgages booming at the moment. What about crypto? We'll find out next.